In this video, you will be learning the two types of demand zones in the markets that myself and all of the members in the Discord group are using to trade profitably in the financial markets every single day. The two types of zones we will be talking about today are the drop base rally area of demand, and the second one is the rally base rally area of demand. These are both found in different situations, and it is just the complete opposite for supply. So for demand, we have our drop base rally. For supply, we have a rally base drop. And then for the other one, we have for demand a rally base rally, and then for supply, we have a drop base drop. So it is just the complete opposite of each other. With that being said, let's get right into this video. All right, so the first zone we are going to be discussing is the drop base rally area of demand. You can see this is a great example of a drop base rally area of demand. Now, why is this a drop base rally area of demand? Well, we are simply going to zoom in on the candles here, and we dropped from here down. So that's the drop. Then we had the base, which is just this one single red basing candle. I've definitely gotten a hard time on my channel before. Oh, it needs to be multiple candles. No, it does not. It can just be one single candle. And in the next sequence, when we talk about the rally base rally demand, we'll be talking about the power of a single candle basing zone. Now, so we have our drop, like I said, we have our base, and then we have our rally. The rally is a very, very important part of a supply and demand zone. If we're over here on our supply and demand zone PDF, which comes with the Diamond membership, you can see we have our two types of zones. These are our peak and valley zones, and these are usually found at the tops and the bottoms of price movement. You can see over here for supply, we have a rally base drop, and then for demand, like we were just discussing, it is just the opposite, the drop base rally. So throughout this video, I'm not going to show you an example for supply and for demand every time. When we're discussing it, we're most likely going to be talking about demand, and then you can just use that for supply. So these are the two types of zones we'll be using for the peaks and valleys, and these are clear swing points where price strongly reverses, right? Because if price is trending down, then all of a sudden we get a nice massive move up. That's a very strong move in my opinion. The issue with these zones is that is often a reaction from a previous zone or previous area. So you can see over here, we clearly had some sort of drop base rally over here. This is not demand because there's no clear basing and move away like we have here. This is more just general price action as we kind of rallied up. But if we zoom back over here, a lot of the times it's kind of just moves off of previous areas before, which makes them a little bit lower odds, which is why I actually prefer the rally base rally or the CP zones, which we are going to be discussing in a little bit. So with that being said, how do we go about and trade this type of zone? Well, it's really the same way as we would trade any zone. This was a trade that we took on the Euro US dollar. This trade also was called out ahead of time in the daily market breakdown video, guys. So I call my trades out beforehand, unlike a lot of the people and the other traders out there. So we are simply placing our order like this. And for take profit, I mean, there's many different ways to take profit. A lot of the times we just like to do a simple 3-to-1 or 2-to-1 or 1-to-1, whatever you like to do. Yeah, you could target the high, but in this instance, you would have actually price would have actually come down and stopped you out before reaching the high. That's why it's also important to be taking profit and locking in profit as price is clearly, going in your direction. So to trade this zone, we are basically doing the exact same thing that we are doing trading any single zone. It is also important to touch on this. This is arguably one of the most important pages in my PDF file. What is not supply and demand zone? I'm going to be touching on this pretty much every video I do. For supply and demand, we are not just mapping out the highs and the lows of price. We're not looking at general price areas. If you look over on this slide, right here, this is the difference between supply and resistance. Obviously, this is the same for demand and support. For supply, we have a very clear basing and that drop and that strong move. For resistance or support and resistance, they're more just general areas that price kind of turned around on. I will definitely not deny that price turned around in this area multiple times, but you can see our real zone is sitting right above this resistance trap. Now, I'm not going to get into liquidity traps in this video, but I definitely have a lot of videos on my channel regarding liquidity traps, which I highly recommend you guys check out. So for supply and demand, we need the basing and that strong move away. We are not looking for basing and then just chugging along, move away like that. We are looking for basing and a massive spike, just like we got here, just like we got there. So that is just a quick reminder, on what we are looking for when we are trading supply and demand zones. Now over here on the Euro US dollar 4-hour chart, I want to show you guys where people kind of get confused when identifying which zone, if it's a CP or if it is a peak and valley type zone. Now, I want to reiterate here, it does not really matter. This right here is a base drop area of supply. If you wanted to call this a rally base drop for whatever reason, if you wanted to just change it because you just feel like it, that's fine. It does not matter. This is still a zone. The most important thing, like we were just talking about, is that we have the two parts, which is the basing and that massive drop. As long as we have that, we are going to have a supply or demand zone. Whether you call it a moon zone or a poop zone or whatever you want to call it, doesn't matter. I'm just making up names here. Whatever you want to call it, it does not matter. I want to make sure that's very, very clear. But where people get confused is they think, so they're kind of just looking at a general price area. They're just looking, if you squint your eyes, so I want everybody to squint their eyes right now. Squint your eyes. You can just see we're clearly we just rallied and then base and then dropped in general. But when you really zoom in, you can see that's not really the case, right? We dropped, then based out, and then we dropped again. So this is actually a CP zone, which we're going to touch on here in the next segment. So a lot of people might actually look at this as they might be seeing this. They might be saying, oh, it's a rally, base, drop. And it's actually not, because we rallied, based, and then we dropped here again, and then we dropped, based, and dropped. And again, it does not matter what you call it. I just want to clear things up because a lot of times people are getting confused because, yeah, we are looking at the general price action, but we're also looking at specific sequences, right, before price drops. So we have our drop, base, drop area of supply here. And going back to this Euro US dollar 1-hour trade, I want to reiterate as well that you're often going to find these zones at the tops and the bottoms of moves. And going back to what we were talking about in that PDF, we're not just coming up here and we're not just, these are the highs, that's supply up there. Let me mark my supply. Oh, and then we have some sort of demand down here. We are not just mapping out the highs and lows here, guys. If you look up here, we had a clear high area. So you can see this is clearly some sort of high. Let me make this black so I can kind of change it. Okay, everyone will say that when price pushed up to here, yes, price could not break this area and price pushed down. You could argue that there is supply in this general area, and I absolutely 100% agree. The difference is that I did not see supply until we had this zone formed, and it actually would have been a profitable trade. It was removed here, this zone, just by a pip. But usually when we are trading supply and demand, just a little bonus tip here for you guys. Usually when we're trading supply and demand, we are entering right at the zone like this, and a stop loss usually just comfortably above. You don't want to have your stop loss right tight against it, because in this instance, if that happened, you would have been stopped out and price would have immediately went in your direction. So that would have sucked. That's why I like to give it a little bit of wiggle room. But this is the difference. Yes, this is a general area where price was turning around, but we also have our significant area of supply. Why is this supply again? Well, we have our rally, our basing candle, the green candle, and then our drop. And that also removed a demand zone from down here. I did not draw supply up here when price initially wicked out of it. Why? Because there was no basing and no significant drop, in my opinion, that looks like a supply and demand zone. So that is why that's a zone, and that's why we're not just mapping out, the general highs and lows. So yes, general highs and lows can have zones like this, but sometimes they don't. I'm sure I can find many, many examples right here. So for example, price clearly wick down here, and we could not we could not break that low there. So a lot of people think supply and demand is something like this, where they're just going to, oh, that's demand, because price cannot go any lower than that. And of course, I will not deny that obviously there is demand in here, but it's not. But the difference between supply and demand and then supply and demand zones are totally two different things. And what I see pretty much is actually two areas of demand over here. One, and then the better one that we got nice reactions off of to over there. So those would be the two zones there. We're not just mapping out the highs and lows, guys. We are looking at specific candle formations, right? So for this example, you could just map out the lows there and you could take this whole area, but then your risk reward becomes way worse if you do something like this, right? Okay, now where price only reached a 2-to-1, which is still not a bad trade, but when you really narrow it down and you really identify the specific basing before the specific explosive move away, that is when you can really narrow down your risk reward, and that is when that 2-to-1 becomes into a 4-to-1 here, which is obviously what you guys want. Yes, you can trade a 1-to-1 strategy. I'm actually testing one right now, but high risk reward definitely will pay off in the long run. All right, now we are going to be talking about CP zones. These are my absolute favorite types of zones. Yes, I will still take the peak and valley areas of demand and supply, but I much prefer the CP zones. And why? Well, because these are original zones. So stay tuned. I'll be telling you guys exactly what an original zone is. But this is the CP zones. These are usually found in the middle of price. Going back to our PDF file here, you can see for supply, we have our drop, base, drop, and then obviously for demand is just the complete opposite. We have a rally, base, rally. And you'll notice for over here, we have 4 candles in our basing. Over here, we have 1 candle in our basing. So both are completely reasonable. I prefer 1 to 2 candles. That is my preferred type of basing. But over here, 4 candles like that, nice tight basing like that, I'll take that trade every single time. So again, these indicate a pause in momentum in a trending market. Usually the odd time, guys, we going to a price chart over here in a second. The odd time we can get a move like this where price pushes down, we base, and then we start to rally, and then we have a rally base rally right kind of at this low here. But most of the time what you see is price is already rallying a lot, and then we get a nice little rally base rally and a nice little demand zone buying opportunity to catch the momentum and target that high. A lot of the times you can target the high with these types of trades, guys. It's one of the most powerful zones in my opinion here. I'm going to show you guys a couple examples here on crude oil. These are 2 picture perfect examples of 2 rally base rally areas of demand. Now I caught both of these trades and I pointed them out to the members in the daily market breakdown videos, which are breakdown videos I release every single day for the members. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links in the description down below. So we had right here a rally, single candle basing, and then another rally. So what we did is we entered at the zone and price went to TP so quickly, guys. And then we had more supply zones being removed up here, and the same kind of thing, a rally base rally area demand, and we simply bought the pullback. Now many people might be saying, oh, why is your zone drawn up here? I'm not going to get into detail in this video, guys, but that is where I drew the zone, and that was the picture perfect trade there on crude oil. We also had many different examples over here in the pound. This past week we actually caught a beautiful, so this is a supply zone example, a beautiful drop base drop area of supply zone trade right there on the GBP USD. And like I was saying, guys, we easily could target the low here. Now I was telling the members 3-to-1 might be all we can get out of this, but I mean, for those of you that targeted the low, that's a 6-to-1 trade off of that little CP zone there on the GBP USD. Why was this a CP? Again, because we had our drop, base, drop. Now another thing with these CP zones, what I prefer is an aggressive drop candle, then the basing candle, and then the aggressive drop candle as well. That is what I prefer. Sometimes we will not get that. I'll try to find you guys an example. Maybe I won't be able to find it on this chart, but anyways, I don't like to see just nice basing candles as we drop and then more basing candles and then the drop. I want to see an aggressive move down, then a basing candle, then an aggressive move down like that, just like we saw here on this GBP USD trade. And then going back to the oil chart, I'm pretty sure it was the exact same thing over there for those two trades as well. And it was, you can see we have a rally, pretty decent rally a rally candle, then the base, then the rally. This one wasn't as good. This is not a great rally candle, but it's not bad for a rally base rally. So I do prefer that significant rally before the base, but it is definitely, you know, not necessary. Even here, this is a gap zone. So I'm not going to get into too much detail on what a gap zone is here, but this is basically a gap from here. That's why it's a zone. But this is actually a drop base rally. A lot of people might be looking at this just and too much in general, where they're saying, oh, in general, price was just rallying and we rallied. Wrong. We had a clear peak over here, then we dropped, based, rallied. So these are two examples together on what a drop base rally is, and then what two examples of rally base rally areas of demand are. So going back over to the PDF, these are some examples of what the candles are going to look like. You can see here we have a doji candle. This is definitely not my favorite type of basing candle, but I have seen them work. It is definitely just not preferred. I am much preferring these types of candles before the rally up. Now this is what I like to call messy, but it's not too bad. Messy as in it's kind of up here and then down. It's actually not terrible. Again, I much prefer the single candle basing and like 1 to 2 candles. That's just my favorite thing that I prefer. So some zones will have the tight consolidation where it's like picture perfect, and then some zones are going to be a little bit out of whack like that, and that is completely fine. We're not going to be too picky when looking at zones. Again, we just want to make sure that we're trading at zones that have an aggressive move away after the basing, guys. I cannot stress that enough. As long as you are doing that, you should be pretty good. Going over here to the move away, these are great examples of move away. Go back to that gap zone we were just talking about. That is the ultimate move away, because price was buyers took so much control that we gapped up to here, right? So we want to make sure we are trading at those move away. We're not trying to trade at poor moves away like that. Absolutely not. Yes, this is an example of a drop base rally area of demand, quote unquote, but is definitely not an area I want to be trading. At minimum, we are looking for a decent move away like that. We much prefer A+ moves where it's the most obvious, explosive move away that we can get. All right, now we are going to be discussing the difference between an original zone and a non-original zone. I want to make it very, very clear. This is not an absolute requirement. It is just something to think about. So you can see over here, a lot of people would probably draw something like this, and I would kind of agree, kind of wide basing here, but that's fine. We had a drop, base, rally area of demand here. And then over here, we have a clear example of a rally base rally area of demand. Now, obviously this one's much better. I mean, look at the explosive move here versus this move. It's just not as good, but they both qualify. I am much preferring that zone over that zone, guys. I want to make sure that's very, very clear. You could actually probably tighten the zone up just a little bit like that and ignore that wick. That's fine. Now, which zone is original? Which zone is not? Well, I want to make sure, so there's original and then there's fresh. With fresh zones, going back over to the PDF, this is an example of a fresh area of demand. Why is it fresh? Because price did not come and hit it yet. And then over here on the right, you can see at this point, now it is a tested demand zone because price contacted that demand zone. This confirms a true shift in market control because now this demand zone is in control. This is a great way to filter out the weak zones as well. I personally, I don't even know if I've ever traded at a tested area of demand or supply ever in my trading career. It's just not something that I like to do. So both of these zones are fresh. Why? Because price never contacted them. If we continue to go on, I'm sure they were hit eventually. I don't know. It seems like they were long gone. But the difference is that only one of these zones is original, and that is this one. And why is it original? Well, because, better yet, why is this zone? So, this is original, but why is this not original? Because if you look, this is pretty much a reaction from previous price action over here. If you look, we actually have a decent rally, base rally right there. So if I were to draw this zone from wick to body's too small, I'm going to make it just a little bit bigger. You can see, oh, look at what happened. We had a rally, base, rally area demand. Look at the explosive move away. That's why it's demand. If you come over here, you can see, yes, we dropped, we based, and then we rallied, creating a new demand zone. But what's the difference? This is a reaction off of this previous zone. So it's not an original zone, where this is completely original, as in it's not from a previous reaction, right? It can't be, because it's usually found in the middle of the move. Going back over to the crude oil chart, you can see both of these CP zones that we took here in the membership, they're both original. Why? Because they're not previous reactions off of anything, because they are CP areas of demand. Where if you were to go back here, okay, we have our drop, base, rally here, but that is pretty much a reaction off of a previous area over here. There's nothing really specific, but you can easily start to draw things out and say, oh, it's a reaction off this. So that is why I prefer original zones, because there's just less trading in that area. And then even if you were to find, so if we were to go all the way down here, okay, so this zone down here, this was a beautiful trade. I remember actually taking this trade as well. This was during, I think it was like the Trump tariff thing or something, but beautiful move off this 4-hour zone. Anyways, took a long time for it to react. But this zone might look original to you, right? Like, oh, look at this. I don't see anything over here. But I mean, if we really, really want, we can keep going over here, and we could keep moving back and back. Then we could really start to find, oh, okay, maybe it was just a reaction, off of something over here. That's why it makes me a little bit nervous, because when there's a lot of trading in one area, it's usually not the best situation, which is why I prefer these original zones, which usually these are going to hit your take profit earlier. For one, because they're good in trending markets. So a lot of times you're going to find these CP zones in trending markets, and a lot of the times you're going to find these PV zones, these drop base rally zones, using confirmation or removing a trend line a lot of the time. So at the end of the day, these are two zones that you guys can use in your trading. You just have to use them properly with just your stop loss and your take profit above. Always trade with a stop loss, guys. I cannot stress that enough. And again, the fresh and original thing, it doesn't matter too much. It is just something to think about. Do you want to only be trading at drop base rally zones? Probably not. And a lot of the times when you're trading at drop base rally zones, you can't really be aggressive with your profit taking, because a lot of times price will come back and hit it so many times, where typically the CP zones, the rally base rallies, are really moving in your direction really, really quick. That has just been my experience. So hopefully this video has helped, guys. Remember, if you want access to that PDF, join the Diamond membership for lifetime access. 38 pages. You can use it as a guide when you're trading every single day. Make sure to subscribe to my channel for my weekly Forex forecast, which I release every single Saturday on YouTube here. And with that being said, best of luck in your trading, guys. As always, manage risk accordingly.